Assalamu alaikum friends. So this is part 2 of the management accounting specimen paper. Section B, section A I have covered in part 1. So section B we have 3 questions and each question is worth 10 marks. That means total we have 30 marks. Okay. So in section B you'll be given a background and this is similar for your F1, F2 and F3, all the 3 papers. Okay. So we'll be just reading the task and just look at task 1. Okay. And task 2 and task 3. Okay. So let us read. Cab company owns and runs 350 taxis and has sale of 10 million in last year is considering introducing a new computerized taxi driving system. The expected costs and benefits of new computerized driving system are as follows. System would cost 2.1 million to implement. Depreciation is 420,000 per annum. 75,000 has already been spent on staff training in order to evaluate the potential of the new system. Further training cost of 425,000 will be required in the first year the new system is implemented. Sales are expected to rise by 11 rise to 11 million in year one if the new system is implemented, thereby increasing by 5% per annum. If the new system is not implemented, sales would be expected to increase by 200,000 per annum. Okay. Despite increased sales, savings in vehicle running costs are expected as a result of the new system. This is estimated to be 1% of total sales. 6 new members of staff would be recruited to manage the new system at the total cost of 120,000 per annum. Cab company would have to take out a maintenance contract for the new system at a cost of 75,000 per annum for 5 years. Interest on money borrowed to finance the project would cost 150,000 per annum and Cab's company's cost of capital is 10% per annum. Okay, so let us see task. If you see task 1, it is worth 5 marks. Okay, 0.5 bars. Another thing which I have discovered, okay, I'm sorry that I didn't tell before, was in the reference. Okay, when you go to the reference, you'll be given the formula sheet. So here we have the formula sheet. You can see the economic order quantity, economic batch order, all those things. Okay, variance, coefficient of variation, expected value. You have been given the annuity table, you'll be given the present value table, the standard normal distribution table. So all these things are here. Okay, now coming to this, in order to determine whether a computerized tracking system should be introduced, indicate whether each of the following is a relevant or an irrelevant cost for the net present value evaluation. Okay, so you have to know which cost is relevant and which cost is irrelevant. That also you have to understand. So first one is computerized tracking system investment of 2.1 million. It is relevant or not? Okay, it is relevant. Why it is relevant? Because this cost 2.1 million, it is a future incremental cash flowing. Okay, it arises only when a project is undertaken. If you are not taking this computerized project, this cost will not be there. So it is a relevant cost. Always unavoidable. The cost which you can avoid, it is a relevant cost. This cost you can avoid how? If you don't take the project, if you don't computerize it, right? But that's why it's relevant. Okay, next is depreciation. Depreciation is an irrelevant cost. Why? Because it is a notional cost. It's a non-cash item, so it's not relevant. If anything is non-cash, okay, it's not relevant cost. Staff training cost, it is relevant. Why? They are future incremental costs. It is something which has to be there in the future. Because of this, future cash outflows will occur. So it's relevant. Next, new staff total salary. Okay, again it is relevant because it is for the new staff. Okay, staff training cost. When it's for new staff, it is relevant. When it is for existing staff, it is not relevant because existing staff does not matter whether you take the project or not. You anyway have to incur that project. It is something unavoidable. So unavoidable cost is not relevant. It's irrelevant. Now comes the interest cost. Interest cost is irrelevant. You can see you have been given 5 out of 5. Why interest cost is irrelevant? The net present value is discounted at the company's cost of capital. So this cost of capital already cost is there. That interest cost, they take account of that. Okay, because we have debt and all when we are calculating cost of capital. Okay, so cost of debt we calculate. So when we are calculating cost of debt there, in the cost of debt we take that interest thing there. Okay, that's why it is irrelevant because it is for the net present value. Okay, now coming to the task 2. Here you have to type calculate the following values if the computer tracking system is implemented. Okay, so what would be the incremental sales in year 1? Incremental sense means the change, not the new amount, the change. Okay, for that we have to go up. Point number 4. Okay, they told sales are expected to rise 11 million. Okay, not by, to 11 million. Okay, if the new system is implemented, therefore increasing by 5% per annum. If this new system is not implemented, sales would be expected to increase by 2% per annum. So we are not interested about whether it will be implemented or not. We are interested if it's implemented. Okay, point number 4. So what is it? Without the investment, how much will be the sales? Okay, with investment it is 11 million, we know. But without investment, what would be the amount of sales? It is 10.2 million. How 10.2 million? Because just read the first line. They told that sales is 10 million in the last year. This 10 million, you are adding 200,000 with it if it is not implemented. Okay, so when you are not implementing it, it will be 10.2 million. Why you are adding 200,000? Because they told if system is new, not implemented, sales would increase by 200,000 per annum. That means for year. For this year. This one was for last year. So for this year, without implementing, sales is 10 plus 200. This 10 million is for last year. Okay, we want for this year. So for this year, without implementing and with implementing, the difference, that is known as incremental amount. So don't go and put 11 million there. This is a mistake which you should not do. They didn't say, look at the question, they asked incremental sales. They didn't ask sales in year 1. So the difference between 11 million and 10.2 million is 800,000. Okay, which is correct. That's why you are getting 1 mark here. Savings in vehicle running cost in year 1. Okay, what is the savings in vehicle cost? It's very simple. They told point number 5. Savings in vehicle costs are expected to be 1% of the total sales. What is the total sales now? It is 11 million. Out of this, just take 1%. It will be 110,000. So 1% of 11 million is 110,000. Next. Present value of the maintenance cost over the life of the contract to the nearest thousands. Okay, present value of the maintenance cost over the life. So this answer, what they have given is in the main answer, it is there's a range. Okay, range means it does not have a specific answer. Your answer can range from that category to that category. Okay, but how do you calculate it? Let us go to the maintenance cost. Okay, it is this point number 7. Maintenance. Okay, so maintenance is what? 75,000 for 5 years. It says new systematic cost of per annum for 5 years. That means what do you have to use? You have to use annuity factor for 5 years. At what percent? At 10%. Why? Because the cost of capital is 10%. So here, when you are going to the annuity factor, you need to go to the annuity factor table. Sorry, annuity factor table. Okay, so annuity factor table, you have to go by 10% and for 5 years, which is 3.791. Okay, so the rate is this one. I'm not able to. 3.791. So you have to multiply by this 3.791 by 75,000, the annuity factor, okay, which will be 284,325. Okay, but look at the question again. If I write the amount as it is, exact number, what happens? Just check, okay? The answer you will be getting is 284,325. Okay, and click it. You will get 3 marks. Okay, but the answer asked you, here they are giving you marks, but make sure that in the exam you don't do it. They told to the nearest thousands. So you can write it either as 28,400 or 20. I'm sorry, this would be correct. Okay, so it could be between 284,000 to 285,000. Between this range, it could be anything. Okay, why they told answer range? Why not specific answer? The reason is when you are using the annuity factor, Some of you might take the annuity factor to the nearest whole number, or some of you might take it as 4, some of you might take it 3.791 as it is, like how we did. Some of you might take 3.79, some of you might take 3.8. Different decimal places you might take an answer, that's why. Okay, but make sure that you write it into the nearest thousands. Here we don't have decimals and all, but make it sure that you write it to 284,000 or 285,000. Between that range, anything is possible. Now let us write this and see if it is 284,000 and see. Still you'll be given the marks. If you are writing 285,000, still you'll be getting the marks, you see, because they told to the nearest thousand, so make it to the nearest thousand. Now come into the task 3. They wishes to maximize the wealth of shareholders. It has currently calculated following measures for the proposed computer tracking system: IRR 14%, ROCE 20%, payback is 4 years. Which of the following is true? Okay. The project is not worthwhile because the payback is less than 5 years. Is it? You cannot say whether worthwhile or not. Look at the payback, so it's not correct. Project is not worthwhile because IRR is less than ROCE. Nope. The project is worthwhile because IRR is greater than the cost of capital. The project is worthwhile because IRR is a positive value. See, IRR being a positive value has nothing to do with the project worthwhile or not. It is definitely the third one. Okay, because your IRR is 14%, whereas your cost of capital is going up is 10%. Okay, your IRR has to be greater than cost of capital for the project to be worthwhile. Remember that. Okay, so now we are going to the next background. And Castilda manufactures toy robots. The company operates a standard marginal costing system and values inventory as standard cost. So following is an extract from the spreadsheet. Okay, you have been given all. Let us go to the task 1 and see. Which formula will correctly calculate the direct labor efficiency variance in cell B18? So B18 is B and 18 is this 48,000 favorable. Okay, what is the formula? You have to know the formula in the Excel also now. It is not something very hard, okay? So don't worry too much if you're not getting the right answer. So it is 150,000 minus C9 into it. We'll understand each one of it separately, okay? This is the reason I have taken this part in part 2 of the video, because if I take it in part 1, then it becomes too long and then students become, you know, they will not be watching the important part. So this is something very important which you need to watch. That's why I wanted to keep it in a separate fresh new video, so the students will watch out and not miss out on any part. Okay, 150,000 minus C9 into 6 into 8. Well, let us understand what is the C9. Okay, let us go to C9. It is production, 26,000. Okay, so 151 is, what is 150,000? Let us see where this 150,000. Okay, 150,000 minus C9 into 6. So this into 6, then after you minus it into 8. Okay, next C9 into C4 minus 150,000 into 8. C9, this is 26,000 actual the production, into C4. Okay, that is direct labor. Okay, so this into this. Okay, minus, because we are taking the actual into this, minus 150,000 into 8. $150,000 is the hour. Okay, direct labor into 8. Why 8? Because 8 is the direct labor per hour. This is per hour. So you can take it like that and see, are you getting 48,000 or not? Let me do it manually. Okay, C9, which is 26 into C4, which is 48. 1248. It's 1248 minus 1,200. You are getting 48,000. Okay, Sometimes you will get 48,000 through all of this, but does not mean that it's correct. Okay, formula has to be correct. Next, B13. What is B13? B13 is this: 1221 minus into C9 into 4. C9 into C4, that is 26,000 into 48,000, which will give you 1248. Okay, 1248 minus 1221 will give you 27,000. So third one is wrong, and the last one is C9 into C4. Again, 26 into 1248 minus B13. B13 is what? 1221. So you are getting 27,000 from the third and the fourth. It's wrong. First one, let's check out. I didn't check the number. C9 into 6, which is 26,000 into 6. So 150 minus 150. Okay, it's not. Okay, so the correct answer is this. Task 2. The company uses standard costing operating statement to reconcile budgeted contribution with actual contribution. A standard costing operating statement for month 1 is given below with some information missing. Complete the reconciliation of the standard cost operating statement for the month 1 to below. You have to complete it now. Okay, you'll be given the drop down list and you have to select one. Looking at this, keep this. So the budgeted contribution and the so what is the budgeted contribution? 700,000. Next. After this, what is the next? Is it total sales variance? Is it sales volume? Is it fixed overhead? It's the sales volume. Sales volume variance. Okay, you have to know the format of the standard costing operating statement. Okay, how much is it? And you have to write whether it's favorable or adverse. Sales volume variance. Okay. How do you know that this is sales? Okay, first let's go out by this. How do you know this is sales volume variance? Because you have to find out the missing. Okay, so the difference between budgeted contribution and the standard contribution on actual sale is what? It is the sale. The difference between the first and this is the sales volume variance. Okay, so we got it that. Now next, what is next? Next is gap 2, this one. So the sales volume variance, how do you get it? You have to know the formula, by the way. The formula is budgeted sales minus actual sales into standard contribution. So the budgeted sales, okay, minus actual sales into standard contribution. What is the budgeted sales? Budgeted sales is 25,000 here, okay, and the actual sales is 25,600. So the difference between this and into the standard contribution, what is the standard contribution? It is 28 given here, which will be 16,800. So 16,800. Okay, whether it's advanced, whether it's favorable or adverse, how do you decide? It is simple. Just look at which one is more, whether your budgeted sale is more or actual sale is more. Your actual sale is more, so it is favorable. Just see here, 25,000 versus 25,600. Actual is more, right? So it has to be favorable. Then comes your standard contribution on actual sales. How much it is? No drop down list. You have to calculate it. It's easy. Just add this with this. Budgeted contribution plus sales volume variance will give you this. So you have to add 17,600. Okay. 17,800. Now, what is it? Sales price variance. How do you calculate the sales price variance? Sales price variance. Sales price variance is actual sales into budgeted selling price minus actual revenue. Okay. So what is your actual sales? Actual sale is what? Actual sale is 25,600. Okay. Into the budgeted selling price. What is the budgeted selling price? 120. minus the actual revenue. What is the actual revenue? Actual revenue is this one, 306,880. So you'll be getting 5120. Okay, but this 5120 is advance. Is it favorable or adverse? Is it favorable or adverse? Go up and check the price. Okay, so sales price is 120. If you see, wait a minute. Okay. This is adverse. The reason is because you have this figure. So if you want to get this figure, this has to be adverse. Okay, that means you have to deduct it. Then only you'll be getting this figure, because you are not given the actual price to compare whether it's adverse or a variable. Here you have, this is why you have to use techniques like this. You have to be smart enough. Sometimes everything will not be given to you to know whether it's adverse or favorable, but you have been given this. So this definitely something, whatever is here needs to be deducted from here to get this figure. So this has to be adverse. It cannot be favorable. Otherwise it will be an addition, right? Coming to this next. Okay. So task 2 is over. Coming to task 3. The management accountant thinks that the direct labor and efficiency variance for month 1 could be interrelated. Which two of the following could explain the interrelationship? Lower graded grade labor performed tasks less efficiently. Bonus productivity was paid to direct labor. Higher grade labor performed tasks more efficiently. Actual production was less than budgeted. Which one? Which two of the following could be interrelated? So two you have to name. One is a higher grade labor performed tasks more efficiently. The other one is a productivity bonuses was paid to the direct labor. Please understand this. What are they saying? Direct labor rate and labor efficiency. Okay, you just cannot answer it. You have to see the direct labor rate. What's happening to the direct labor rate? It is 48. The standard. Okay, you have not been given the actual and efficiency variances. What's happening to the, you can see the variance from here. If you can see, is it material or it's labor? It's labor. So the, it is adverse. Okay, total direct labor rate variance, this is an adverse. But when you are coming to the efficiency, it is favorable. Okay, rate means you are, labor rate means, adverse means you are paying a higher rate than the standard. You are paying more. And labor efficiency favorable means they are being more efficient than what you have. They are taking less time to produce, or they are more efficient, they are more motivated and all. So out of this, which two explains this relationship? It is this: higher productivity bonus was paid to the direct labor. Productivity bonus, okay, definitely you are paying a higher productivity bonus. That's why your rate is increasing. If you are paying a bonus also, that's why it's an adverse rate. Okay, and because of that, a productivity bonus means they are now being more productive. That means they are more efficient. That's why the efficiency is favorable. Okay, the third, this one, higher grade labor perform tasks more efficient. Definitely, if you are, it's a higher grade means they will be paid more, but they will perform more better. So efficiency will be favorable, labor rate variance will be adverse. Okay, whereas if it's the other two, it's not, then this will not happen, then it will be the other way around. Okay, come to the next. This is the last task and the last question. Okay, so we have, if you can see how much we have completed, just keep an eye on their progress and their time. Okay, it is 90% we have completed. Okay, so the 10% is here. Next, Nicholson sells mobile phones. It supplies its customers with telephones and wireless telephone connections. Customers pay an annual fee plus a monthly charge based on calls made. The company has recently employed a consultant to install a balanced scorecard system. So, okay, balanced scorecard system is also an area in management accounting or performance measurement and to benchmark the results against those of the Nicholson company's competitors. Unfortunately, the consultant was called away before the work was finished. You have been asked to complete the work. The following information is available. So, you have been given the operating information. Okay, sales revenue, the sales for the new products, average capital employed, profit before interest and tax, average number of customers, number of bill queries, number of customer complaints, customer lost, all those things. Okay, let us go down. It is assumed that there are 365 days in a year. Okay, the reason why they are giving number of days, because sometimes you have to use this number of days when you have to calculate for each year or something. Okay, so task 1. Okay, so task 1 is calculate the following ratios and other statistics for this one. Okay, ratios, another important area. This ratios is throughout ACCA will help you a lot. You have to know ratios, even whether it's for your financial reporting, SBR, or your financial management, advanced financial management, whether it's for your audit, whether it's for your test, this ratios you have to learn. Okay, it's very helpful throughout your ACCA. So first is return on capital employed as a percentage, return on sales, operating profit margin terms, asset turnover, which is in tons, and average weight for a telephone repair to the nearest whole number. Okay. So let us see what is the return on capital percentage. Okay, what is the formula? The formula is profit before. Let us go to the reference and check whether we have been given the formula or not. Definitely we are not given those formulas. Okay, this formulas, not all the formulas are there in the formula sheet. Some you have to memorize. In fact, many you have to memorize. Okay, so the formula is profit before interest and tax divided by capital employed. So what is your profit before interest and tax? It is this 48 million divided by capital employed. Capital employed is 192. So 48 divided by 192 into 100, it will be 25%. Okay, 25. Next, even you can see here, this is for your overall exam, and this down one is for this, just this question. Okay, how much you have completed this question. Question 38. Return on sales, operating margin. What is the formula? The formula is profit before interest and tax divided by sales revenue. Same, you have to take 48 divided by sales. What is sales? 192. Wait. Return on sales is same, profit before interest and tax divided by sales revenue. Okay, so it is here 48 and the sales is 480. So 48 divided by 480, it will be 10%. Next, asset turnover. The formula is revenue divided by return employed, average return employed. So sale is 480 divided by 192, which will give you 2.5 times. Next, days, average wait for a telephone repair. Okay, so what it could be? How do you calculate it? Return. Okay, it is the return for the repair each year into 365 days. Okay, so average number of telephone unrepaired at the end of each day, how much it is? $804 divided by average number of telephone return for the repair each day. So 804 out of 10,000 into 365. Okay, it will be 29 days. But your answer could be even 30 days also. If you are getting 29 point something, you can write either 29 or either 30. So let us say we are writing 29. It's correct. If you write 30 also, it will be correct. Okay, because if you are getting in terms of percentage, they told write to the nearest whole number. Now let's see what happens if you are writing this in decimal place. 30.6. See, you are not getting marks. You have to write it in the whole number. So 30, 29 or 30. So you can close the task 1 and you can open the task 2 if you want. Okay. Calculate the following statistics for giving answer to 2 decimal places. If you give your answer to 1 decimal place or whole decimal place, even if your answer is correct, technically you will not get marks. So you have to be very strict. If they ask 2 decimal place, means they want 2 decimal place. Percentage of customer loss per annum and percentage of sales attributable to the new products. Okay, this is something which has to be very easy for you. All the formulas and has to be in the tip of your nails. You have to know it. Tip of your finger. I'm sorry, not nails. What is it? Percentage of customer lost. Okay, so what is the formula? Number of customer lost divided by average number of customers. Okay, so how many customers are lost? Number of customer lost is 117,600 divided by the average number of customer. What is the average number of customer? It is 1960. So the total, it will be, sometimes if it's whole decimal place, sometimes you might be giving us 6%. So if you write 6, make sure that you write 0.00 so that it is understood that even though it does not matter whether you write it 6 or 6.00 because they told you to write in 2 decimal places. Okay. Next, percentage of sales attributable to new products. What could it be? So it is your sales attributable to new products divided by sales revenue. So sales attributable to new products. Okay. It is this one, 8 million over 480. So it is 1.67%. Okay. You can either write 1.66 or 1.67. 2 decimal places you have to write. Let's see what happens if you are writing it to 3 decimal places. You are not getting marks. You see, only 1 out of 2. You have to write it to 2 decimal places. So now I'm going to close off task 2 and task 3. Finally, in the task 3, complete the following explanation of the balanced scorecard. A balanced scorecard measures performance from 4 perspectives: customer learning and growth, financial success, and what? Process flexibility, process efficiency, or non-financial success. It is non-financial success. You see, so you know whether you are right or not. Process efficiency. And the last one is the scorecard is balanced in all that it requires managers to achieve on an equal number of KPIs in each perspective, deliver performance in all 4 areas, offset bad performance in one area with good performance in another. Deliver performance in all 4 areas. So you see here, this question you have completed it 100%, and even the exam also you have completed it 100%. Now what I'm going to do is I'm just going to exit it because I'm done with it. So you see 100% because it has taken my section A also, which I stopped in part 1. So make sure that you watch the part 1 of this and part 2 of this. Okay, another question, that is this, more questions are there to the specimen paper. So make sure that will be part 3. Okay, I will include it as part 3, a separate part, even though it's a different questions in a different paper, but I will include it there, and make sure that you watch all the part 3, 1, 2 and 3 to see the types of questions that can come in management accounting. So that's all, and take care, and see you soon in the financial accounting paper.